Everyone, this is Jim Barrett from RJO Futures. It's Monday the 27th. Okay, bonds, almost a 7-point rally off the lows mid-month. I think it was July 14th. We were trading around 147, actually 8-point rally. We're up with a 155 handle. How did the bonds do this? Well, they correctly anticipated, I believe, that the NAS upside breakout, as such, we had really wasn't a breakout. Of course, now we're back in the same ranges in the stock indexes. The Dow was at the bottom of recent ranges, the S&P near the bottom, and then NAS still in the top third, but the breakout buyers are certainly taking some serious heat, and this is even with some spectacular blowout earnings reports and some of these big-time tech stocks that had just unbelievable upside responses. The bonds took it all in stride, and we're able to uptick throughout all this period. Now today there's finally some bond-friendly news, and the bonds are lower. Well, it's just how this market operates. It's a very sophisticated market, and oftentimes is ahead of the news. Chinese stocks are coming the week down 8.5%. We find out maybe why there was a bid in bonds the last 2 weeks. Anyways, yields fell all the way to 294. This is a long way from 324 back on July 14th. There is resistance to lower yields, higher bond prices starting solid resistance at 285. There's an old low back on 529, May 29th near Memorial Day, I guess, and there's a trend line there also. So that's why we stalled out even with the rout in Chinese stocks today. Interesting week news-wise. Not so much because there's an FOMC meeting, which there is. A 2-day meeting starts tomorrow. Results will come out Wednesday, 1 p.m. Status quo is expected. Market participants don't really think Yellen will make a move until the September meeting, a month from now. And actually, the Bank of England may beat her to the punch. That'll put even more pressure to show that she can normalize interest rates a little bit, regardless of the fact there really is no inflation, regardless of the fact that durable goods, they were up today, disappointed a bit. The industrial part of the U.S. economy is seemingly softening, and so it's a rough environment to be raising rates, but you've got to start the process of getting things back to normal. All right, the PMI services flash tomorrow morning, 9:45. Case-Shiller home price index. If there's any inflation in this U.S. economy, it is in home prices. We'll see what that reading is. Pending home sales on Wednesday, and then of course that FOMC meeting I already talked about Wednesday afternoon. GDP on Thursday, jobless claims. Then Friday, unemployment cost index in Chicago, PMI, consumer sentiment. There's not much Fed governors happening this week. I think that's typical on a week that there is a monthly meeting. So we'll basically, at this point in time, probably wait till Wednesday afternoon and see what the chairwoman has to say. I can reach at 800-500-2461 to discuss any futures market. Please give me a ring. Thank you. Futures and options on futures may involve substantial risk and may not be suitable for all investors.